Hey guys, it's Kevin at Watchhimtrade.com. Today's date is May 25th, 2015, Memorial Day, so the market is closed today. This will be a video chart on Netflix. Stock has been on fire over the last few months. It's been on fire over the last few years and over the last few weeks, over the last few days. Bottom line, Netflix has been a beast. So you're looking at a daily chart right here, and I've just got a couple horizontal lines drawn at the base of recent gaps higher in the stock and just support levels overall. So you can see since the beginning of this year, we've got 1, 2, 3 major gaps that really stand out to me, all at various $100 marks. This first one is at the $400 mark, the second one is at the $500 mark, and then this third one is at the $600 mark. And what I just want to point out is that Netflix hasn't come back to fill any of these gaps, and in the case of the $500 gap, it never even came back down to test the gap. The $400 gap, we did come down and test the base at the beginning of April, late part of March, but we were able to hold that base and it stayed steady. So the first key support levels to watch moving forward on an intermediate term basis is this $600 mark, as that is the base of this most recent gap up higher. As long as you stay above $600, then Netflix looks really strong in the upside, and you can't make any argument against the momentum to the upside that the stock has been experiencing. If you can get below 600, that's where you start to get in a gap fill scenario. That's where the action looks different than it did back in April and back in January, and looks like it's maybe going to roll over and pull back a little bit, because Netflix, when it has gotten into its gaps before off of gaps higher, such as back in 2014, you had a gap higher in January, you broke below that in March of 2014, we're talking here, and you can see you went from $380 all the way down to $300. So when you broke below the gap, there was a really nice flush to the downside. Then you had another gap in the middle part of April. The stock had gapped up on earnings from 350 to 370. You broke below that, and again, a nice flush. You dropped like 50 points in 4 days. So if Netflix can get below the gap, then she could have a good flush like she did in 2014. But 2014, the early part of that year, was the last time you saw the stock fill a gap higher. So that's the main thing to be watching for. I know people want to talk about, 620 and 610 and all these other levels, but to me, 600 is really the only level that matters right here. You could pull back 21 points for a 3.5% decline, just about, a little bit less than that, and still not have any technical damage done. Need to get below 600 in order to really look at this thing as maybe being a short trade. Otherwise, I think you continue to buy dips. That's been what's working. Remember, a stock that goes higher is not a stock that has to come down and go lower. That's what everybody kind of makes this bubble argument. Oh, the higher it goes, the more it's going to fall. Well, maybe, but you could have been saying that at 200, then 300, then 400, 500, and you've missed this whole move up if that's your mentality. So I'm going to say that until I start seeing it come down, then the trend is to the upside, and we'll get another look at it from a gap perspective in June, July, when its next earnings report rolls around. But in the meantime, stock looks very strong, a lot of momentum here. In the extreme short term, if you forced me for a level to watch, I would say 615-ish, as that was your low area on the week. This past week you had a little spike below 615 on the 20th, popped back above it though, and then held it into the end of the week and started to get stability above 620. So as long as you're above 615 in the very short term, I think it is looking immediately higher towards 630s. even 650 is being in play. Get below 615, you can challenge this 600 gap that I talked about, but not until you get below 600 can you really start to look for solid downside in Netflix.